Hi, welcome to this video. It's June 26th, it's Monday, it's 8 PM GMT. What we're going to do today is look at two high probability chart setups. They are GBP, NZD, which we think has got huge profit potential, and also another great opportunity in NZD, USD. We're going to be doing the charts a moment. We're going to do a very simple chart analysis, but what we're going to do is use two indicators that are fantastic for warning of big trend changes or market turning points. They're the ADX indicator, a very simple indicator to use. It's also very accurate. I'll show you how to use it when we get to the charts. And also our favourite tool in Forex trading, the COT, the Commitment of Traders Report. If you don't know about the COT, there's an explanatory video underneath this one where you can learn more about it. But just in brief terms here, what we like to do is trade with the smart money commercials when they go against non-commercial speculators. You see how we do this as I go to the charts as well. Now, one point I'm going to make for new viewers to our videos is in terms of the techniques you're going to see, the technical analysis is very simple. And yeah, the two indicators we're going to use, if you look at them historically, they're very accurate. The ADX, very accurate in calling major turns in the market, and the COT is as well. The commercials are never wrong about really big market turning points. Okay, so you have real confidence in those tools. And also in terms of the COT, gives you the sentiment behind the charts. Of course, the chart doesn't come out of nowhere. A lot of people think it just moves on its own to some sort of predictive pattern. As I've said in many of my videos, prediction doesn't work in the Forex markets. Complicated patterns don't work. Yeah, the chart is a reflection of the sentiment towards the fundamentals. So if you know the sentiment towards the fundamentals, you get a deeper insight into the chart. Now, in terms of trading, you trade the reality. You don't predict anything. You wait for the market price to prove you right, in my view. Now, you'll see how we do it when we get to those two charts. I also want to focus on a minor pair today, USD, HUF. Spoken about it in the weekly forecast over the last few weeks. And a lot of people write to me and say, you know, should we really be trading those more minor pairs? The answer is yes, you should trade or look at as many pairs as possible. Slightly wider pip spread in the HUF, but it's got big upside potential at the moment against the pip spread. And there's certain advantages trading minor currencies over the majors at times, which I'll go through when we get to USD HUF. So let's take a look at the three charts, and we're going to start with GBP NZD. On the GBP NZD daily chart, we've seen a nice downtrend, and we're starting to slow up here. Now, are we going to turn? Now, from the technicals, if you just look at them, you don't really know as such, or you can't really estimate the probability. This is where the, in my view, the COT report can really give you an advance warning. So let's have a look at it. Now, in terms of the COT, non-commercial speculators, okay, big funds, they're 4-to-1 in terms of short positions over long positions, okay, so they're very bearish. Okay, commercials 6.4-to-1 in terms of long positions over shorts, so they're getting bullish, the British pound. Got divergence of ratios 10.4-to-1. That's between the ratios of both groups. Anything above 10 interests us. And what also interests us this week is the commercials have stepped up their selling in the New Zealand dollar in a number of pairs. They were bullish. Okay, so they were heavily bullish of the NZD here, bearish of the GBP. And look what happened to the GBP. It came down. So they anticipated this, and the non-commercials were caught heavily long at the top. Now the groups are the other way round. That's warning us that we could see a turn in the pound. The other thing that's warning us is the ADX. Now the ADX is down the bottom here. It's the black line. It's a very, very simple indicator to use. All you do is wait for it to go above 40, then turn down. So it turns down. A trend change could possibly be on the cards. Okay, Now what happens, that's the candle it turns down on, travel sideways a bit, and then we drop to the downside. Now notice we've got another ADX potential signal here. We're flat above 40, okay, and it's not going to take much to turn this down. If it does, it's really going to add weight to our view in terms of the British pound having a really good move to the upside. So what we're seeing, obviously the downtrend, basically now here, the volatility is slowing up, the pound still soft, we've got red candles, but we're now starting to find support, okay? So if I draw the support level in, I think it's at the round number 174, and also if you take it across here, there's a bit of a congestion zone before she broke out strongly to the upside. I haven't drawn that line quite straight, sorry about that, but you can see what I'm trying to do there. Now, in terms of where would you want to come in, well, in my view, if you draw that line there, you've got a diagonal line to come through. But yeah, you might want to wait for this 176 level to get cleared out. So these three candles here, really, in my view, just let it get past the round number, okay? Now, if we do turn blue and go up through that level, from my experience, the ADX is going to basically turn down. And we're looking for a big move to the upside here. So where do we think we could go? Well, I think 182 looks a good level, just around here where we broke up and find support in that blue candle there. And then we got some congestion over here. So I think that would be the first target, and then the second target I'm going to go right up to 188. So I'm expecting this whole decline to be retraced. Okay, now if we get a breakout here, there's plenty of upside. The stop shouldn't be too close to the 174 level, which is the support level. It should be back from this level, probably by about 50 to 60 pips. Okay, but you've still got plenty of upside. Now, in terms of, obviously we've read the COT positions, okay, and see the smart money thinks the pound is going up. We've got the ADX as well. Also, our fundamental analysis points to the pound going up in terms of what more bad news is there to hit the pound. Yeah, you've got people talk about hard Brexit, problems that the Tories might have because they have to go into coalition. There's no more bad news. People are very bearish about Brexit and everything, but not much has happened in the UK economy that's been bad. The only thing that's bad actually is inflation is on the rise, and the Bank of England may soon have to hike rates. So I think the bearish fundamentals have peaked for the British pound, and the bullish fundamentals are peaking for the New Zealand dollar. So this trade could, we hope, turn into a really nice position trade. And actually, for those people who follow us regularly, we did actually take this breakout and took it not all the way to the highs, but pretty close. So we got 1,000 pips out of that long trade. This one can easily do the same or a little bit more. We've already had a couple of goes at longs in this trade. We've had one small loser, one basically scratched at break even. This time when we break out, I think we'll be going strongly to the upside. Right, let's move to the next chart. Right, we're on NZD USD daily. Now, first of all, what we obviously have is a nice strong uptrend. We're pressing up against these highs here. But, in terms of the trend, yes, it does look strong, and the majority of people or analysts are bullish of the NZD now against the USD. But the COT is giving us clues that we could see this trend reverse. Now let's take a look at the positions. Non-commercial 2.2 to 1 in terms of longs over shorts. Commercials 4.9 to 1 in terms of shorts over longs. So divergence 7.2 to 1. Now that's not as big as the divergence that we saw on the other chart, but what's important is, in our view, just a couple of weeks ago, the commercials were pretty bullish of the NZD. In fact, they've been bullish all the way up from the lows, and they started to get out of their longs into the 72 area and basically come in with a short position. And the commercials, non-commercials, are long. So are the non-commercials going to get caught? My own view is I personally think so. You've also got an ADX setup as well. Before I look at the ADX setup over here, I want to look at this one over here. And you can see, go above 40 and turn down. The prevailing trend was up. This candle here, we see the ADX warning. We get a nice trend to the downside. I'm not sure if I said it on the other chart, but yeah, when an ADX line turns down above 40, it doesn't matter if the trend is up or down. It could be either way. You just basically are looking for a trend change. Okay, so if the trend is up, it turns down from 40, you look for a move to the upside. Obviously here we're looking at downturns. Now, obviously, it is a strong trend, and we are, at the 73 level. So there's no point in just anticipating that, the New Zealand dollar is going to come down. We've got to find a level to come through, and a level probably where the ADX is going to turn down as well. And I'm going to put it as a diagonal line there. Now I'm going to do another little straight line there through two candle bodies and two tails. Sorry, if I could draw a straight line. So there we go. So really through about 72.60, where would your stop be? My own view is I wouldn't put it behind this tail here. I'd probably put it a little bit further back, probably right back here, okay? Just behind 73.50, probably 73.60 would be a good level, breakdown. Because of the amount of commercial selling that's in the market, I don't think this level here is going to hold. From my experience, we're going to see a major run down. And I think down here, really, towards 70.50 is going to be the first stop, because you've got what I would consider to be fairly big support at this level. From our reading of the fundamentals, we think we're going to go back all the way to 68.50. Now, in terms of fundamentals, can't remember if I said it in the previous video. You can watch our weekly Forex review of the fundamentals behind the charts, and that will give you more insight into why we think we're going all the way to 68.50. But just with that COT position, the way the groups have switched around, okay, with the commercials now heavily selling, non-commercials still long, and an ADX line, which will, it's not going to need much to turn it down. It'll turn down on the first, I think, red candle from here. So that is my view of NZD USD, and we'll see if this one comes to fruition. Let's move to the next chart. On the USD HUF, just want to, before I draw my levels, just want to give a little bit of background to it. And I think this is a really good pair to have in your portfolio. Most broker platforms have got it. You'll pay about 15 or 16 pips in spread. Obviously, on the majors, you pay 2 or 3. So you're paying about, let's say, 12 pips more. And that puts a lot of traders off. But, when you've got really good profit potential, when you're trading longer term, that is insignificant, really. It's not going to really impact on your profits, okay? So, always consider the minor pairs, in my view. And also, why you should consider minor pairs, they've got less speculative interest. So you're not going to get the spiky action you can get in the majors. And that's just going to be happening because you've got so many speculators trading. The less speculative interest or less observed a pair is, and I can't remember who said it, I think it's Bruce Kovner, the more reliable your analysis can be. Now, I find this one a really nice one to trade. In terms of CFTC net trades positions, there aren't any, but you can work out the bullish or bearish sentiment of non-commercial speculators by just looking at research houses. I mean, I've got 20 on my list which basically really do analysis on this pair. They're brokers and banks. The ones I looked at, 16 bearish USD, only 4 bullish. One was actually very bullish though. So you've got a bearish consensus, and we know that generally the sentiment is against the dollar. But in terms of this pair, using a 20-day moving average, which we like using in strong trends, and in terms of this gap here, It's caused by the French elections. When Macron won, the euro went up, pulled all the other European currencies with it. So the huff pushes the USD down. Now in a strong trend, the 20-day moving average will normally stay above price. Okay, nearly get up to it there, come down. Then we get this double bottom here. Sorry if I just draw it. So you get the double bottom there, or triple bottom even. Comes up. Now we test the 20 there. Touch it, touch it, touch it. So 4 touches and volatility is dropping. For us that means downside pressure is waning. The interesting candle is that one there, because we go basically to a new low. Okay. Sorry, I can't draw the 2 straight lines together. So there we go. Go down. Basically, there's no more sellers down here. Got a bearish extreme, and we move up. So now we just want to see if that 20-day moving average breaks. So what we do is that. Okay, so we've got a diagonal line, and also the 20-day moving average, is with a round number. Okay, and you've got 4 bodies. I know it's quite small, you might not be able to see it so well. 4 bodies there. Okay, so all you got to do is come through this level. When you get big strong candle, low volatility, and you take out a 20-day moving average, it's normally a good signal. I thought it would actually carry on to the upside, but we did come back. But yeah, once 20-day moving average is broken, it's not resistance anymore, it's going to be support. Find support there, find support there, then we push up, and now we've got low volatility again. We're just traveling slightly to the downside. Now from our perspective, this trend has got a lot further to run. We think a bottom has formed, and we're looking for the gap to be closed. So right up here. Okay, so that's obviously if we're right, that will be a lot of profit potential. Where would I come in? I would just basically come in on strength now, above that red candle, and I think we'll move up to 291. Now where would you put your stop? You just put it in the middle here really, so about 273.30. Just stay away from the round number. I've given it a little bit of distance, okay? But yeah, if you got your stop here, coming in here, you've got about 3 to 1 in terms of your profit over your risk. I think, in terms of the huff as well, let's say we do get a really big move from risk, then which currency is going to go down quicker, the huff or the euro? It's going to be the huff. Yeah, the huff is really an emerging market currency, and if we get a move from risk, I think it's got better potential than the euro USD. So actually, in terms of my trading, I've got a small position short euro USD, got a bigger one long USD huff. Now my point in showing the huff today, just really simply, don't ignore the more minor pairs. The more pairs you look at, the more opportunities you're going to get. And providing the pip spread is not too unreasonable, then it's fine. If your profit potential is really good, you just take off the spread, see what it is, also to your stop loss. And if the profit potential is good, why not go for it? I've never been that worried about paying a few pips more. I just feel that the more pairs you look at, the better, and the ones with less speculative interest can be very, very good. So that is my review of the 3 charts. Obviously, I've just done 2 different ways of trading today, COT, the ADX. Obviously, this one I've used 20-day moving average and low volatility to high. But I think when you're trading, you basically have to see each chart formation as unique and use tools that are simple. And the best tools that you've got for the chart formation, if that makes sense. I think, well, this one here, it was a classic break of the 20-day moving average, with it finding support, off low volatility. It's a decent setup, and there's just plenty more upside to come in my view. So that is my review of the charts today. I'll update this one in the member centre, and also GBP, NZD, and NZD USD as well, so we can track how they go. Obviously my view of the charts is as it is right now. Obviously we will change our view, possibly in line with the market action as it unfolds. Right, thank you very much for watching me as per usual. Take care and have a good day.